just this week I got the opportunity to catch up and have an interview with Gianni from Fit Investment Property down in Melbourne. Essentially, he runs a buyer's agency firm down in Melbourne and puts out a heap of great content on Instagram, YouTube, and even on Facebook. So I'll link down in the description to his channels. Make sure you check them out. But we had a super interesting conversation this week on the investment market up here in Cairns, what rental vacancies are doing in the area, and we had a really in-depth look at what's happening with the land tax changes that are coming into play in Queensland and what the likely impact will be of these changes over the next couple of years. So check out this interview. I hope you enjoy it. And if you do, make sure you subscribe to this channel as we bring out a heap of content on this channel, and absolutely check out some of Gianni's content as well. Let's jump into it.
Very good. So look, everybody, I'm lucky enough to have Sean Craig, property investor, here with me. Sean, thanks for joining me.
My absolute pleasure. Thanks for having me on today.
Awesome. So look, let's get right into it. First question I have for you is, I was hoping to get a bit of an understanding of your career progression and maybe a little bit about how you got into investing in real estate.
Yeah, absolutely. My background is I started as a real estate agent 8 years ago. I sort of got nudged into that from my wife, who's always been in property management. So we've sort of had two sides of the business sort of from the get-go, that property management rental side, which I think is really important to have that background knowledge. And then obviously the sales side, which sort of helped with sourcing deals. Pretty much we started our journey, I'm going to call it 6-7 years ago in regards to property investing. And in that time, we've built up a property portfolio of 8.5 properties. I say half because we own half, one with a good friend of ours. So 8.5, we'll call it.
No, that's good. Every little bit counts. No, that's good.
Just a half.
Yeah.
Got a good half.
So primarily you're based in Cairns. I was hoping you could sort of give me an indication of some of the trends that you're seeing in the Cairns property market. A couple of things around, especially around vacancy rate and rental yields that you're seeing at the moment.
Yeah, absolutely. Cairns is a super interesting market. I think firstly, our price point up here, it really is an affordable price point. You can still buy a single house and land dwelling for around that sort of 350 mark. It's getting harder to find quality properties at that price point, but you can still pick up deals around that 350. Otherwise, you can still pick up really quality units for around 200,000. So our price point up here is certainly really affordable, especially when you compare it to the capital cities around Australia. And we're not a small population up here either. So Cairns has about 160,000 residents. So we're certainly not a small regional town. I guess we're more of a regional centre, if anything. So yeah, there's certainly that price point is probably the most appealing thing. But coupled with that is our rental yields up here. They're certainly pretty strong. It's nothing to be buying a property for 350,000 and getting a 450 a week return. So that's sort of pretty exciting in that space.
Yeah, that sounds pretty awesome. Yeah, no, that's good. No, Cairns, I've already seen Cairns personally as a bit of a regional hub for the area. They have, a lot of professional services. People will need to come into Cairns, especially around the sort of the surrounding area. So, no, I don't think anybody should consider Cairns as a sort of a rural town. If anything, it should be considered a regional hub especially for North Queensland.
Yeah, absolutely. And that's very much reflected in both our days on market in regards to selling property. So our days on market personally sitting somewhere around that 30-day mark. So around 4 weeks to get something up online, advertised, and then under contract. So that's pretty comparable to most of the capital cities. And then our rental vacancies are basically non-existent. If we put something up for rent, we've got 5-6 applications on it within a couple of days. And those rental returns and the actual weekly rents we're getting have just absolutely surged over the last 18 months. And I just can't see that slowing down at the moment. The amount of supply, it's just so limited at the moment.
Yeah, very good. Sounds like a bit of an investor's delight, I guess.
Yeah, absolutely. And I think, that the increasing rental returns is very much going to lead to some capital growth. And we've already been seeing that over the last 18 months. And I think that surge is going to continue.
Yeah, good to hear. Yeah. In a slightly different topic, I know Cairns is a very popular holiday to stay. I've actually got family holidaying in Cairns at the moment.
Yeah, very nice.
Yeah. What do investors need to know if they're sort of considering the short-term rental option for an investment property?
Yeah, so if you're looking at going down the short-term track and having that sort of Airbnb or having maybe a holiday a on-site manager look after the property. Couple of things. First thing to check out is the zoning of the property. It's a bit of a catch-22. If it is classed as a serviced apartment, typically they won't have a designated car park, and the banks can be a lot stricter on lending on those types of properties. So just make sure you speak with your finance broker if you're looking at going down that path, especially if it's zoned, that short-term residential zoned as a serviced apartment. If it's zoned as a long-term property that you can live in it permanently, there's also the catch-22 that if they do bring in any changes to short-term legislation, like what they've done in New South Wales, you might not actually be able to use it for that purpose throughout the year. You might be limited per, I believe Sydney's down at 180 days a year if you're looking at doing short-term accommodation down there. At the moment in Queensland, we've absolutely got free reign, but it's only a matter of time, especially with the rental prices going on, before possibly that gets looked into a little bit further and we might see some legislation change in Queensland.
Yeah, okay. No, so that's two important points to look out for as well. I think also as well, I've seen some strata units have in their bylaws as well that you're unable to do short-term accommodation. Is that also the case in Cairns? Have you seen that much?
What I've seen so far, looking and researching into it, is pretty much the body corporates are powerless in Queensland at the moment. Yeah. There's not a whole lot they can do about it. But I think the big push we're seeing at the moment is the rental crisis is so bad, especially in Queensland. Cairns in particular, like it's near impossible to find a rental property. So there is a lot of people lobbying and trying to change the Airbnb market in order to grab back some properties to the permanent rental market. But you look at the numbers and I don't think it's going to really change that much. I don't think it's the holy grail that they're searching for.
Yeah, fair enough. No, I understand. How do you sort of feel the introduction of the Queensland land tax changes will have on local property? We've seen that be introduced recently.
Yeah, it's certainly a big one, and it sort of goes hand in hand with what I was saying just about the rental crisis. I was actually having a look just earlier today, just sort of re-looking at just what sort of tax is charged for someone if they own property. And it's interesting that, first of all, the laws aren't being grandfathered. So what I mean by that is if you've owned property in Queensland for the last 10 years, the land tax changes affect you as well as anyone that's buying currently. So it's not like just because you've owned previously, you're exempt, which has been the case for a lot of taxes. For this one, I think it is going to catch a lot of people by surprise or cause a lot of people to sell their properties. To look at some of the figures, so essentially just to give a summary of what's happening in Queensland, if you own investment properties in Victoria, South Australia, New South Wales, in other states of Australia, the Queensland government's going to be looking at your entire investment portfolio across Australia and then taxing you at that rate. So currently in Queensland, the first 600,000 is essentially exempt from land tax. And what they're saying now is if you own 600,000 worth of investment properties in another state of Australia, they're going to add that to your total. So what that ends up looking like, which is a pretty scary sort of scenario, say you've got $1 million worth of assets in New South Wales, and then you own a $500,000 property in Queensland, essentially they're going to tax you at 1.65% on that 500,000. So that's about $8,500 on a $500,000 property if you own property $1 million worth of assets elsewhere. So that extra 8,000, that's $150 odd a week for someone because they own another property in New South Wales, which I think is going to be disastrous for the rental market. I think there'll be a lot of investors deciding not to take on and pay that $8,000. It just won't make sense for them. They'll be exiting that property, and it's going to very much put extra pressure on the rental market.
Or they're going to look to bump up their rent because of the additional costs, the additional ongoing expenses as well, and pass that on to the renter.
Yeah, it's interesting. I think there's a big portion of the population that's really looking at this and going, okay, if we can drive down the sales market prices, that's going to help people. And I always challenge that question with, at what point do you class property as affordable? Cairns is one of the most affordable markets in Australia. We've got a median price point of about $440,000, yet we've got one of the highest rental rates.
Yeah.
So there's no real correlation between affordable property and higher ownership levels. So it's a bit of a false fallacy.
Yeah. I think the only thing that's going to solve the rental crisis for me personally is making it easier to increase the supply of available homes. And that, if anything, that should be by encouraging investors to get into the market to increase the amount of rental vacancies. Yeah.
Yeah, absolutely. I think they need to really be focusing on incentives for new builds, cutting the council costs, cutting the taxes on new builds, and really focusing their energy on that point of the market. It's obviously what's going to create new supply. But yeah, at the moment, with the cost of building materials going up, the cost of wages going up, and then you throw all the taxes on top of that,
yeah,
it actually sort of serves the opposite. If the market prices drop for properties, people are less likely to build new. So it's sort of self-sabotaging, really.
Yeah. And all the red tape in between doesn't really help.
Yeah, exactly right. So it's, an upside down moment in time, and you do scratch your head with these policymakers and you just go, they're really not considering the unintended consequences.
Yeah, very good. Well, look, Sean, that's all the questions I had for you. One last question I had was, if anybody wanted to get in touch with you, how is the best way for them to do so?
Yeah, so I run a couple of social media platforms. YouTube's one of my favorites. Definitely check out Sean Craig Smart Investing. Otherwise, you can find me on Instagram as well. Always open to a direct message or shoot me a comment, and I'd love to get back to you.
Yeah, awesome. Sean, thank you very much for your time. I really appreciate it.
Absolute pleasure. Thanks for having me on today.